Monish Pabrai's The Dhando Investor provides a straightforward and accessible framework for value investing, inspired by the principles of successful entrepreneurs, particularly the Patels, a group of Indian immigrants who built thriving businesses in the U.S. Pabrai draws parallels between their approach to risk and reward and the strategies employed by great investors like Warren Buffett. The book distills complex investment strategies into actionable insights, emphasizing a low-risk, high-reward approach. Key concepts and takeaways. 1. Dhandho philosophy. Low risk, high return. The term Dhandho means business in Gujarati, and Pabrai uses it to describe a philosophy of making investments with minimal downside risk and significant upside potential. He advocates for the principle of asymmetry. Heads, you win. Tails, you don't lose much. This is achieved by thoroughly understanding the business and only investing when the odds are overwhelmingly in your favor. 2. Investing. Like an entrepreneur, Pabrai highlights the success of the Patel community, who transformed the U.S. motel industry. They bought motels at distressed prices, operated them efficiently, and minimized risks through sweat equity and resourcefulness. Investors, he argues, can adopt a similar mindset by seeking undervalued assets and managing risks carefully. 3. The margin of safety. Central to Pabrai's investing philosophy is the concept of a margin of safety, popularized by Benjamin Graham. By buying assets well below their intrinsic value, investors reduce their risk of permanent capital loss. He advises looking for situations where the intrinsic value is clear and the price offers a substantial discount. 4. Concentrated investing. Pabrai challenges the conventional wisdom of excessive diversification. Instead, he advocates for focused investing, where capital is allocated to a few high-quality opportunities with strong potential for growth. This concentration allows investors to achieve meaningful returns without diluting results across too many positions. 5. The Dhandho framework. Pabrai introduces principles that guide his investment decisions. Buy businesses, not stocks. Focus on understanding the underlying business rather than short-term price movements. Focus on simple, predictable businesses. Invest in industries and companies with straightforward operations and stable cash flows. Look for distressed or overlooked opportunities. Seek companies facing temporary challenges or neglected by the market, creating opportunities for value purchases. Clone successful strategies. Learn from proven investors by replicating their methods rather than reinventing the wheel. 6. Patience and long-term thinking. Patience is a cornerstone of Pabrai's philosophy. Investors must be willing to wait for the right opportunities and give their investments time to compound. He stresses the importance of resisting emotional decisions and focusing on the long-term potential of investments. 7. Checklist-based investing. Pabrai recommends developing a personalized investment checklist to ensure thorough analysis and minimize errors. This systematic approach helps maintain discipline and avoid costly mistakes. Conclusion. The Dhandho Investor offers a compelling framework for individual investors seeking to achieve superior returns with minimal risk. By blending entrepreneurial insights with proven value investing principles, Pabrai provides a practical and replicable roadmap for financial success. The book's emphasis on patience, simplicity, and risk management makes it an invaluable guide for anyone looking to adopt a disciplined, long-term approach to investing.